Hey guys, I'm back with another video, and today I'm going to be talking about Oatly. I'm going to be going into all the numbers, what I think this company is going to be doing, how much money they're going to make, and what is a good price for their stock, like whether it's overvalued or not. Now first, Oatly. It's a Swedish food company that produces alternatives to dairy products from oats. Their main product is oat milk. They also have a few other products like ice cream and yogurt. It's all oat based. Now, this company IPO'd not too long ago. This is from their investor presentation. Here we can see their gross profits were affected pretty bad. In Q4 of 2020, they reported a 30% gross profit margin, and in 2021, they reported a 16% profit margin. And this is due to like inflation, supply chain disruptions, all that. But over the long term, they do see this changing, and here they're going to be making drastic changes in 2022. They're going to increase their rate of self-manufacturing, and they're going to reduce their co-packing, which is one of the things that is affecting their margins. And then, long term, they expect to see a 40% gross margin, and most of that is going to be from them self-manufacturing. And here they gave a little bit of numbers on, how many liters of oat milk they're going to be producing. So, in 2021 was 600 million, and by 2023 we should see that number double basically. Now, one of the things that might affect Oatly in the short term is the fact that here I have a piece from an article saying that oats were the best performing commodity out of all the commodities in 2021. There's an 89% year-over-year price increase. So in 2021, January 1st, the price per bushel of oats was $3.61, and now it's $6.83. So that's a pretty crazy 89% increase in oats. Now here this guy is saying going into 2022, I think that you're going to see more oat acres because of the prices. I do see that as like a short-term issue, but over the long term, once more oats starts getting planted and everything, the prices should definitely go back down. So I'm not worried about that over the long term. Everything has been increasing in price as well. Like here I have from November 2019, this is all from the USDA. The US simple average prices was $3.45 a gallon for whole milk, and then $3.39 for regular 2% milk. And then here, it just increased over time. So the next year is $3.60, and then the next year is $3.77. And here we are in March of 2022, and the prices are on average $4.02 for whole milk and $3.97 for 2% milk. So, over a 3-year span, well, a little over 2-year span, we've seen a 50-cent increase per gallon of milk. And who knows if the prices of that is going to stabilize at all, but this is what we're stuck with for now. Now, this is the price of Oatly if you go to your local store, if they have any. Right now you can usually find Oatly in places like Target, and they're expanding their SKUs across the country. Now, it costs $5 for 64 ounces or half a gallon. And here's for milk. This is pretty expensive. Gallon of milk, in some places you can find it for like $3.50. Some places, here it says that the average is $4 a gallon. The prices vary on where you live. So this is definitely an expensive gallon of milk. But yeah, I just wanted to point out that Oatly, compared to this gallon of milk, is about twice as expensive. So, it's not a cheap alternative, but there are many people looking to buy Oatly because they're vegan or they just want to be healthier. There's a lot of demand for plant-based milk. Now, here's one of the reasons that a lot of people are looking towards plant-based milk. It's that approximately 65% of the human population has a reduced ability to digest lactose after infancy, and lactose intolerance in adulthood is most prevalent in people of East Asian descent. So think countries like China, Korea, Japan, those countries mainly. And it affects 70 to 100% of people affected in these communities. Now, that doesn't mean that they can't drink milk. It's just, lactose intolerance is an impaired ability to digest lactose. So, when these people drink milk, for some of them it might not be that big of a deal, and then for others, it might be a bigger deal. But yeah, people in these countries still drink milk, even though 70 to 100% of these people are lactose intolerant, or they consume stuff that has milk, like cheese and yogurt, ice cream. Now here, just for comparison, like Germany, 16% of the population is lactose intolerant. In the US, it's 36%, and in China, it's 85%. So you can definitely see how this affects people around the world. Now, oat milk is actually, it's taking over market share from soy milk. Basically all of them, but yeah, almond milk. So here you can see in the United States, almond milk had like a very big market share, and it's been going down a lot. So here is like almost 80% market share, and now it's down like to 60%, whereas oat milk, over the past 3 years, basically, it's gone up to 21% market share. And this is in the plant-based milk retail market. And, in places like Sweden, or the UK, or Germany, oat milk already has market share. The majority of market share. In places like the US, it's just getting started. And I think, one of the reasons is that, it's just better. And then also, it's, here we see that almond milk uses 371 liters of water to produce a liter of almond milk. And, rice takes 270 liters and oat milk takes 48 liters of water. So I think that's one of the things that's playing into all of this. But yeah, we can definitely see oat milk taking off in the US and other countries, because here in the UK it went from 20% to almost 50% market share, and then Germany, around like 35% to 65%. And this is all in a 3-year span, so that's ridiculous. Now here, in the United States, we can see that oat milk has a 21% market share of plant-based milks, and here Oatly has a 6% market share, and that's just because Oatly hasn't been around that long in the US. It's been around a long time in Sweden, because that's where it originated, but in the US it hasn't been around that long. So, and oat milk hasn't been around that long in the US either, so you can just see this taking off. And here, when Oatly entered into Switzerland, it became the #1 plant-based milk product in less than 12 months of entry. So you can just see like their competitors, they just are taking huge hits. And here we can see Oatly is definitely planning on growing a lot. For 2022, their guidance is around $880 to $920 million in revenue, which is a 37 to 43% year-over-year growth. And then here are their long-term targets. They see their profit margin at 40% and then 20% EBITDA. Now, here I have a lot of pieces from articles. So according to Precedence Research, the global dairy products market size was valued at $481 billion in 2021, and it's expected to hit $642 billion by 2030, growing at a 3.2% compounded annual growth rate from 2022 to 2030. So the dairy market is very big across the world. Now here, this is taken from a research presentation. So basically these researchers are estimating that plant-based dairy sales are largely comprised of milk alternatives, which is a fairly mature market, and it enables a 10% total penetration of the dairy market. And then you have your other dairy alternatives, which include yogurt, ice cream, cheese, and butter. And they're very small today, but they will aid overall growth. So 10% penetration of $642 billion in 2030. And if the pace of these drivers should be stronger than expected, the plant-based dairy retail sales could reach $81 billion in 2030, and then a very conservative estimate, if this doesn't really take off, is $50 billion. Now, if we take the $642 billion dairy market in 2030 and we take the 10% penetration, then there's a total addressable market of $64 billion in plant-based dairy milk alternatives, basically, or dairy alternatives, pretty much. And here, alternative milk is by far the largest component of the plant-based dairy market, accounting for about 75% of sales. So, stuff like yogurt, ice cream, cheese, and butter, they're not really that significant. These make up around 25%. But the milk is making up 75%. And then here, we have in the US, for total percentage share of dairy products, fresh milk and cream make up 31%, whereas other dairy products make up 70%. So the numbers are pretty much backwards, from regular dairy to plant-based dairy. Now, if we assume that plant-based milk makes up at least 50% of plant-based dairy sales in 2030, and this is just to pretty much make a conservative estimate. But yeah, if it makes up 50% of plant-based dairy sales, then this basically gives a $32 billion total addressable market for plant-based milk. Alright, so here, Oatly was the first to create oat milk in Sweden, and it's the world's leader in the beverage. In Sweden, Oatly has a 53% market share in the total alternative dairy category, and this percentage is the company's North Star goal for future international expansions. In the US, oat milk has 4% or 14% market share, and then, Oatly has a 6% market share of that. So, yeah, it's not that big right now. Now, if we assume that oat milk makes up, 70% from over here, basically, I see oat milk hitting up to 70% of the market share, if not pretty much all of it. Like, it could go up to like 90 or something. I'm going to say 70% for this calculation. So if oat milk makes up 70% of total plant-based milks in 2030, then we would take the $32 billion market for plant-based milks times 70%. So that would give us, $22 billion market for oat milk. Now, if Oatly is able to capture 25% of that market, then we have $22 billion. And I know that they said that they want to hit, 53% market share, but, I would say if they hit 25%, that would be really good. So if Oatly hits a 25% market share in the oat-based, in the plant-based milk market, then you would take the $22 billion market for plant-based milk and times 25%, and that gives Oatly a $5.62 billion market opportunity in 2030. Now, right now, they're estimating to make about $938 million in revenues for 2022. If we take that and we take the potential $5.6 billion in 2030 over an 8-year period, and that gives us a 25% compounded annual growth rate, or 500% total change. So basically a 5x. Now, Oatly's current products, they have their milk, but they also have yogurt and ice cream, and then some potential products that I could see them getting into the future would be cheese and maybe butter. I don't really know what other products they could get into. I'm sure there's other ones, but these are the main ones, and then possibly these, who knows. And then here, assuming that oat milk is going to be able to capture 12.5% or $8 billion of the total $64 billion plant-based dairy market. And, I'm taking really conservative estimates here because, I assumed earlier that, that plant-based milks are only going to make up 50% of the plant-based dairy sales. And then here, I'm estimating that oat milk is going to be able to get 12.5% of the plant-based dairy. So, there's a lot of market left out of this, but these are all conservative estimates. Now, if they get 12.5% or $8 billion, and that's just for oat milk, and then Oatly gets 25% of that market share from oat milk, then we could see a $2 billion market for alternative plant-based, oat milk-based dairy products such as these. So if we take, the earlier $5.62 billion of oat milk market share that Oatly will have, and then we add on another $2 billion in other products, then we could see a potential $7.62 billion market share in oat-based dairy for Oatly. Now, that would change these numbers, so that would, over an 8-year period, that would give us a compounded annual growth rate of, basically 30% versus 25% earlier. So it's a 5% difference. or a 710% total increase over an 8-year period in sales. So that's pretty significant because that's compared to 500%. So that's pretty good. Now, earlier, let me see if I can find it. So Oatly was saying that they long-term targets, which I would consider 2030 to hit that mark, would be 20% EBITDA. So if you take a 20% EBITDA in 2030, that would basically give us $1.5 billion in EBITDA, and then after taxes and everything, I'm calculating that Oatly would see $914 million in profit in 2030. Now, if we assume an 8% share dilution per year, right now Oatly has 591 million shares. If there's an 8% share dilution per year from 2022 to 2030, then I assume that Oatly will have 1 billion shares outstanding. So if we take the 1 billion shares and then we take the profit, the earnings per share in 2030 would be 83 cents. So, that's not bad. Now here, if we plug these numbers into a fair valuation calculator, the current stock price of $5 and the current book value per share, and then the projected earnings per share, and then here I put a maximum P ratio of 30 and a maximum PB ratio of 10, then we could see potentially a fair value of $23 for this stock in 2030. So that's what this is what I think that would be a fair valuation for this stock in 2030. Now, if you take the current share price of $5 and the future fair value price of almost $23 over an 8-year period, we would see a compounded annual growth rate of 20%. So, that's pretty good. 20% year over year growth is pretty significant. Now, right now, Oatly has a $3.1 billion market cap. Their price to sales is 4.5, price to book is 2.5, and their enterprise value to revenue is $4.27. Now, this is what analysts are saying. 16 analysts are covering Oatly right now, and they have a median price target of $10, a high estimate of $16, and a low estimate of $5.50. So the low estimate is actually higher than the current stock price, because the current stock price is $5.13. It's $5.12. But yeah, so that's pretty significant. So pretty much they're saying that there's not really a downside. If you buy it right now, then the low estimate is $5.50, and that's for a 12-month forecast. So they're saying in 1 year from now. So I would definitely say, based off of the analysts, that this stock would be a good buy right now. Now, as for me, if we take the revenue numbers that Oatly is going to be putting out in 2022, so this year, my forward price to sales ratio is $4.76, and that would be basically for me a fair valuation of the stock. So forward price to sales ratio of 3, that would give us a share price of $4.76, and then a price to book ratio of 2, that would put the stock at a $4.2 fair valuation. And then if we take the forward EVR of 3, then this would give the stock a fair valuation of $5.9. So the numbers kind of vary, you know, from 4 to 6 for me of like, that would basically signal to me that this stock is a good valuation. So for me, $5 to $6 is a good range for me to buy into this stock. Anything above 6 I would have to, you know, kind of look into. But my numbers are definitely, for me, they're a lot lower than what the analysts are saying. But I'm taking a very conservative approach to all of this. Now, Oatly does have a huge competitor. There are some companies producing oat milk, but this is our biggest competitor. So Chobani, I'm sure most of you know what that company is, but if you don't, you know, they're a pretty big yogurt company, and then they also have, you know, some milk. But Chobani is actually looking to do an IPO as well. So, you know, Oatly, they IPO'd not too long ago. Chobani is looking to basically do the same thing. And Chobani is a pretty established and old company, and, you know, they're seeing their sales increase in their regular yogurt brand, and they're also adding new products such as oat milk. And, you know, here are some of their products. You know, looks very similar to Oatly. But yeah, you know, they have their milks and their yogurts just like Oatly. The only thing that they don't have the ice creams, and, you know, I would assume they would start expanding into that. Here they say that they want to look into other products like yogurts, ice cream, and beverages. And, you know, right now their regular market is, you know, it's pretty much restricted to the US because they can't really export stuff, you know, like stuff like milk and yogurt. It doesn't have a long shelf life, so that's why they want to look into oat milk to start broadening their market, because here they're saying oat milk has a much longer shelf life, and if they start producing oat milk here in the US and they can export it to the Asian market, which will be a major part of our business strategy, because, you know, as I said earlier, you know, there's a lot of lactose intolerance in Asia, and I'm sure a lot of people would like to consume oat milk over there, or, you know, plant-based milk. So, you know, they're definitely looking to get into the Asian market as well. It's not just Oatly. But right now I think Oatly has the upper hand because Chobani's saying that they want to produce the oat milk in the US. But Oatly is actually making factories in Asia and, you know, across the world. So they definitely have the upper hand there. They don't, you know, they're not going to have to worry, you know, as far as exporting stuff, and, you know, that'll just create a lot of supply chain issues. Instead, they can just make the oat milk locally, and then they can just put it on the shelves and sell it. And then Oatly also has, like, you know, a lot of momentum behind it. It's a growing brand, and a lot of people are becoming more aware of what this is. And, you know, if Chobani enters into Asian markets, then, you know, they're gonna, like, if they were to enter at the same time as Oatly, which they're not, because Oatly already has a large presence over there. But if they were to enter in at the same time, it'd basically be like even grounds, because, you know, this brand isn't known in Asia. You know, nobody cares about this brand in Asia. So, you know, I definitely think Oatly has a big advantage here. They entered the market first, and, you know, they're going to be, you know, more vertically integrated and everything. So I think that's very important to note. But yeah, that's my analysis on Oatly. Let me know what you guys think. I know, like, the numbers were very conservative. You know, we could definitely see, like, for example, if Oatly achieves 53% market share in the total alternative dairy category, then it would just inflate these numbers drastically. So, like, that would, you know, instead of 25%, we would give it 50%, which would change this number to, you know, like $11 billion So that would just change all these numbers. So, we could definitely see Oatly growing at, a 50% annual growth rate, which would be ridiculous. But right now I'm just sticking to kind of like a 25 to 30% growth rate per year, which is still really good. But, I'd rather take the conservative estimate and, leave a lot of room for error. But I could definitely see Oatly exceeding my expectations and, and the stock just going up like crazy, especially once we get over the headwinds of, all this inflation, once we start seeing more oats being produced and the prices flatten, I think that would bring a lot of institutional investors into the stock, but right now, it's kind of a risky play. Oatly does have a pretty decent balance sheet, they have more cash on hand than they do debt. I have no idea when this company will honestly be profitable, and that's just because this company is, investing a lot of money into growing. So, so their profit margins are affected a lot, but they're building many factories, which I didn't include in this presentation, but they're building a lot of factories, and they're definitely, they're going to be doing a lot of advertising and everything. So that'll cause obviously some profitability issues probably for at least the next few years, because all the factories that they're building right now, they don't expect to be complete until 2023. They expect them to start producing in 2023. So I think in 2024 is when we might start seeing some profitable quarters. I doubt that they're going to be that profitable, but 2024 is my estimate, and they have plenty of cash on hand to make it to 2024. And assuming that inflation doesn't just completely spiral out of control, but they're set up pretty well, and there's a lot of demand for their product. So I don't see this company having any issues. Even if they didn't get to profitability by like 2025, I think it'd still be totally fine. But yeah, I think 2024, that's my estimate. And they're just gonna have to beat out all these other competitors such as Chobani. There's a few other ones, but they're not that great. So yeah, those are my thoughts on Oatly. Let me know what you guys think, and I'll see you guys next time.